What's going on, everybody? This is Travis from Carter Capital. This is another episode of Trade with Travis, episode 289. Been jumping in and out this week. Haven't been able to um, be as visible on this page as I wanted to, but I wanted to make sure we end up going through about 15 minutes to be able to talk about what's happening with the market. Last time we ended up talking was on Monday. What we're going to end up doing is talking about where we are right now and some possible trading opportunities to be able to get into. Let's go ahead and get through the disclaimer, and then after that, we'll go from there. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from the education, you can be able to make your own informed decision. Understand that trading involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you can end up making money today. So with that being said, as we go through and take a look at the economic calendar today, it's the last of the biggest days that we're going to end up having. A couple days ago, this kind of recap. We end up on Tuesday. We end up having retail sales and everything else like that. Pretty negative across the board when it came down to most of the stuff. United States dollar ended up having a negative score 0.4. We ended up looking at China, ended up having a negative score of 18.4%. But one country that ended up doing pretty well on most of that stuff was the Canadian dollar. We end up having on Wednesday we end up having imports and exports from Japan, and then going into today, what we have is that the New Zealand dollar and the Australian dollar just had their budget and their full-time employment come out. We have initial jobless claims that's going to end up coming out today. That's not going to really affect the market as we've had non-farm payroll earlier a couple weeks ago. So typically this doesn't move the market like it used to. Anything inflation based will, but the market's probably not going to move as much just because of this. And then after that, we have retail sales going into everything that's going to happen tomorrow. All right, now to move fast, what I'm going to end up doing is just talking about what I see when it comes down to each pair based off the last few days that we end up talking about and based off of what's happening. So, United States dollar index is still considered to be bullish. It was in consolidation. We talked about I would not consider doing anything until this market broke out of 12,860. This market broke out of 12,860 2 days ago. Currently, right now, we see that the market is popped out to the upside when it comes down to this movement. We can see that obviously this market end up having a breakout, and then after that having a retest, and then after that start being able to push back up to the upside. So this market is considered to be bullish currently right now at this particular point in time. What I will look for from an hourly standpoint and from a 15-minute standpoint is to see how the market is going to end up reacting. Is the market going to retest this overall zone and do like a double bottom before being able to push back up? So we're going to end up getting something like this to where the market pops down and then after that pops right back up to the upside and then keeps on moving. If we get that, then we have an opportunity of being able to find adequate trading position to be able to move from and be able to jump into. Um, if not, then we'll just seek and try to wait to see if we can get a little bit more value as we end up kind of tying that out to what we end up thinking what was going to end up happening earlier. All right, let's talk about oil real quick. When it comes down to oil, oil is still in consolidation. Has not really made one big trade on oil. Matter of fact, let's clarify. I think I've only traded oil once this year, just because of where the market actually is. Remember, it fell all the way down to $64 a barrel. Then after that, popped right back up to the halfway point. So if you end up doing strategy 4, which is basically buying at support, and then after that getting at the halfway point, then that trade will be over with. But currently, right now, because of this position, I have not took a trade on oil, so I'm going to kind of stay away from it right now and just kind of keep on moving forward. Let's go gold. Take a look at what's happened with gold. We end up having a plan to where the market end up falling or breaking this counter trend line break, which is this purple line. Then after that, we'll look at being able to get into the trade. It ended up breaking past the past support, past resistance, turn future support, and then broke back inside. Remember, let's see, doing fine. Thanks for asking. Hope everything's well with you. Um, we end up talking about this consolidation zone a while ago. And what ends up happening is that the market ends up breaking the support again. it will fall down to the next support. Typically, that always happens. So when the market broke back inside of this overall zone from 2010 all the way down to 1975, we knew that we are going to probably end up seeing that the market falls down to support. That ended up happening a little bit earlier today. So the question is, are we going to see this market fall again, or are we going to finally see that there will be a counter trend line break? Now, if you want to be a little bit more aggressive, we know that based off of what we looked at with the United States dollar index, the United States dollar index has broken out of that consolidation, um, which means to me that for a certain amount of time with this market kind of popping to the downside, just to be able to retrace, that we should expect when we go and take a look at what's happening with oil. I'm sorry, what's happening with gold is that the market will end up having a little bit of a retracement first before being able to pop back up. What's going on, Peter? How you doing? Um, what we probably might end up seeing. Um, Long time no see, Peter. I hope everything's going well with you. Um, what we probably might end up seeing is something like this. Market may fall, probably might end up retracing off the backside and then pushing back down to the downside. Now, that means that the United States dollar is going to remain to be strong. If that happens, then that is the move that we're probably going to see. Um, but there's really no U.S. based news that's going to end up happening today that's going to affect the market. I don't think initial jobless claims is going to end up getting it done to be able to make the market move like that. Okay, so let's just keep that in mind. Let's go. Let's talk about Bitcoin real quick. Let's see. Give me 1 second. Cool. All right. So when it comes down to what's happening with Bitcoin, Bitcoin fell all the way down to support. We talked about being able to jump in if the market ended up going back down to support because I felt like there'll probably end up being a good chance that it may stay inside of this range from 26.5 all the way down to 29,000. Currently, right now, the market did pop. It gave two chances to be able to get in. Plus, the market once it ended up breaking, it ended up having a breakout and then ended up having a retest back at the same point. Now the question is the market going to hold and continue to keep on moving back up to the upside? Don't know that as of yet. New Zealand dollar versus United States dollar. I will take a look at that. We don't know that as of yet, and kind of seeing what's happening with the United States dollar index, I do believe that the market is going to continue to be bullish, but I think it's going to fall down today in order for the market to keep on getting more rallying strength. So we may see that Bitcoin may pop up today, but I don't know if it's going to end up being short sided. So I'm going to stay away from Bitcoin real quick. Since I'm still on this page, we'll take a look at New Zealand dollar versus United States dollar right now. Been a while since I looked at it, but we'll go back into it. All right, from a weekly perspective, this is what's happening, and then after that, we'll jump into everything else. Um, I talked about two different, or when I looked at it a few weeks ago, we talked about what was the trend. Ultimately, I believe that the trend was still considered to be bullish, but the United States dollar so heavily outweighs what happens with the New Zealand dollar sometimes that ultimately you're still trying to look for a move where the United States dollar is going to end up gaining strength. Now, even though the United States dollar ended up gaining strength over the last couple of days, this last week the market has been on a little bit of consolidation. It rejected off of this inner trend line, um, which means to me that this market may fall a little bit. Now, it's going through its first phase of a down fib, and the market only retraced down to the 382, which means that the market is quote unquote healthy enough to be able to make a move out to the upside. But what I would like to personally see is that the market ends up falling down to this sweet spot right around the 618, 786, and 86 positions. Um, in order for that to happen, the United States dollar has to remain. The United States dollar has to remain strong over the course of the next couple of days in order for this to be able to happen, fall down, and then after that, be able to pop back up. I don't know without based off of this and looking at what I'm looking at from a weekly perspective. Let's go to a daily because the weekly is basically showing me consolidation. From a daily perspective, showing a little bit more consolidation, but the range has not been fully developed as of yet. We have two high points, we have two low points, but I think we probably need a little bit more information, Peter, to be able to do anything off of this one. Me personally, I'm going to stay away today. We'll see how everything kind of plays out. Matter of fact, we do have a defined support. The defined support is at 61. Um, I would say defined resistance is at 65, which makes this basically in the halfway point. But for right now, it's really clearly no great move to jump into and feel pretty comfortable about. So I'm going to leave that as it is right now, and then after that, we'll take a look at it a little bit later on. Me personally, Peter, I probably wouldn't do anything with it. Um, let's go US 30. So keep in mind, the United States dollar index is going, in this case, was going up, and that means that the Dow Jones would have been falling down because of their correlation to each other. Now, with that being said, from a long-term standpoint, the market is still inside of this large consolidation where the support is at 35,540 and the resistance is at 34,360. We're still inside of this overall area, and we're bouncing off the inside of or bouncing off of the bullish portion of an Ichimoku cloud with no counter trend line break as of yet. Now, this is from a daily perspective. Keep that in mind. The market is showing signs of being able to break out to the upside with having about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, with 11 of 13 days being bearish. Now, with that being said, I would lean to saying that the US 30 is probably going to end up having a bullish day, but it has the same type of move that ended up happening off the United States dollar. This one fell in a down channel. We talked about that earlier. From that down channel, it ended up popping back up to the upside, broke out of the channel, retraced a little bit, broke a counter trend line break, and then after that, currently right now is almost above the B, or almost above this little area, 33,473. If this market breaks above 33,473 to the upside and closes above it, then we should expect that it could get up to 35,572. So you're talking about 100 and talking about 100 points when it comes down to that movement. If you're a person that wants to be able to scalp, that would be the move that I would look at. If you're a scalper, um, if you're a person that's trying to do this for a long-term position, um, pull up a idea on that one as well. If this market breaks, you would like to be able, typically you would like to be able to place a stop loss below the swing low. You don't. If you do that, then the risk reward is going to end up being off. So I would look for one of these candlesticks to be able to close, and I place it right below the VWAP. That would mean that wherever the VWAP is, once the market ends up breaking past this point, then after that, I'd be interested in being able to take it. I don't have a legitimate stop loss as of yet. Um, but I would say it'll probably end up being right around 33,390 as the stop loss. Take profit on this one, end up being at 33,570 if the market ends up breaking past that movement. That's the first. That'll be the first trade if I'm a scalper. If I'm trying to be able to um, get as much as I possibly can. Now, from a second trade standpoint, if you're looking at volume profile and trying to get an example of what's happening, you can see that we have this large high volume node that's right here. Um, yeah, you can see that there's this large high volume node that's right here, and then after that, you have this gap in between of unfair market prices until you end up getting to this point. So the second trade, if you're trying to trade this from a swing trader's perspective, or just trying to get a little bit more value, I would trade up to 33,712 or 33,700, depending on how you end up looking at that. Stop loss will end up being in the same area, but now you got a 1 to 3 risk reward ratio. if you end up playing that out that way. So stop loss will end up still being right around 33 890. With take profit on this one being at 33,710 or 33,700, giving you about 200 points to be able to go after, depending on the move and depending on how the market is. So I would say test the environment, test the market, and see how the market's kind of playing out, see how everything's going. We can see on the 1 hour the market's a little bit overbought. So I don't know if this move is going to end up happening today, but if it does and it ends up breaking the high of this beat, I would like to be able to enter right around that point and be able to go from there. I would not look at being able to jump in right now just because I don't know if this move has, I don't know currently right now if this move has kind of lost a little bit of steam based off of what ended up happening yesterday. Yesterday, the market started off at 32,980. It then after that popped up to 33,460. So it ended up having a very big move yesterday. Um, it ended up having a 500-point move yesterday. Now, if you've been around trading, obviously a 500-point move is not unfamiliar when it comes down to the Dow Jones. But going into 930 and everything else like that, I would like to be able to see how the market kind of reacts first before being able to jump in. But once it breaks this high, if it breaks the high of this overall move and then starts to be able to push, then after that, I'd be interested in being able to jump in. So um, it has to break this high of this move right here. And once that happens, then after that, I'll be okay with being able to at least kind of test the waters first. Okay, typing a Y, yes, if that makes sense. But the bar has to close above it. You can see that we end up having this wick, but the bar has to close above it. Let's go Nas 100, and that'll be the last one for today. So Nas 100, the last time we ended up taking a look at this one, I said that this was probably the best situation to be able to get into. The reason why I said it was because of two separate things. One, you take a look at where we are. We're in the middle of being able to go inside of this high volume node that was broken, and being able to finish off the extension at 13,390. I'm sorry, 13,940, which was the long term take profit. The market doing, ended up showing consolidation and then end up breaking out, fell back inside of consolidation, and then after that started to be able to make its push up as we're looking at it from this blue consolidation area. It was in consolidation for more than 15 days. We end up having a plan where the market was going to end up going from 13,160 and being able to get out at 13,480. That was when we ended up talking about this trade. This was on the 18th of last month. Market kind of stayed inside of consolidation for a little bit, broke inside, and then after that started making this triangle. Now, typically when you see a rising wedge, you'll see that the market will end up falling from this position. But once again, we go back to volume. If we go back and take a look at the low volume node, there's really no players in this area from a corporate standpoint that will be interested in being able to sell in this area. So the Bulls still had a better chance of being able to push out and move in this position. That's what ended up happening. Market ended up breaking, completing its overall move. It was a 300-point move. It took a while to be able to get there, but the move is over with at this particular point. Now, um, in my mentality right now, the only thing that I'm looking for is bullish activity and bullish positions to be able to jump in. So same deal, 15-minute perspective. If this market ends up breaking the overall high, then I'll be interested in possibly being able to get in. The market is already above the high on this one. Um, the question is, where will we get out at? To go based off of the 2 hour, like we looked at it before. We're about to break the overall high that ended up happening all the way back in 2022 when we started talking about interest rates. Um, this was on the same day that Chair Powell ended up speaking about being able to raise the interest rates for the first time um, last year. So um, we're getting back to that point. If the market especially breaks this area, then after that, the market's truly going to end up being bullish. But I think that there's just more bullish activity that's on the horizon, and will continue to keep on going. And so look for counter trend line breaks. Stop loss will end up being below the swing low. Take profit off of this one. We go back to the daily and we just go back what the original plan was, would end up being up to 13,940. So I'm bullish and I'll look at keep on buying until 13,940. So we got about another 300 points of movement that we'll do. Now, hypothetically, if I'm taking this trade right now today and I'm jumping in as we're going through this, let's say if I'm taking it the price right now because the price is still above the A, my stop loss on this one, if I'm a short term trader, will end up being just below this overall swing low. Um, and then after that, obviously, we'll target 13,940. You have a great risk reward when it comes down to that. You got a 1 to 6 risk reward that could potentially end up happening. My problem is that I think that the market is probably going to end up falling down a little bit more, and possibly retesting this overall area again because it has not retested this wedge. So that's the only thing that I'm kind of iffy about. I think that what may end up happening is that this market may end up pushing up and kind of being able to make its move and then ultimately being able to fall down, retest again, just to be able to prove that the market is truly bullish and then jump from there. If that happens, then obviously it'll be a quick loss. So this one, I will lower my percentage on how much I'm risking. I would probably go with 1%, depending on when I get in. If the market falls down and ends up hitting a support right here and yeah, hitting past resistance turn future support and stays right here, then my order will probably end up being a little bit bigger because I can make my stop loss a little bit lower and feel way more comfortable with it. So something like this, so they probably end up being stop loss will end up being below 13,420 and still targeting the same position, which would be 13,940. But now we got a little bit more room, and the market was healthy enough to be able to fall. So New Zealand dollar, I'm not going to make a move off of yet. I'm sorry, Nas 100, I'm not going to make a move off of yet, but that would be my ideas on both of those. Um, that is it for today. Gonna thanks for being able to pop in. Thanks for being able to watch. I do appreciate each and everybody being able to do that. Like always, make sure that you end up planning your trade your plan. I'll see each and every one of y'all on Monday as we go through and get everything else going from there. All right, take it easy.